Good afternoon, StockCharts TV viewers. Thank you for joining Alex and I on this latest episode of GoNoGo Charts. It's May 12th. We are together in midtown Manhattan. Nice to see you, my friend. Just on opposite sides of the conference room. But really appreciate you all sticking with us every Thursday afternoon. Let's dive right into the markets, Alex, from a top-down perspective, looking at the trends of the asset classes. Anything new that we want to comment on this week?
No. The asset map looks very similar. We see the NoGo trend in equities strengthening, though. We saw some really damaging price action this week so far. We still see a downtrend in Treasury bond prices, although they've weakened a little bit this week, which perhaps with the market struggling so badly makes sense as people put a little bit more of their faith in bonds. Commodity prices still in a go trend, but weakened and showed an amber bar. And the dollar still very, very strong, and Bitcoin, of course, in a world of pain.
Absolutely. Dollar strength really challenging a lot of people's internal forecasts. And I think that that's the nature of technical analysis, is that we want to remove subjectivity. We don't want to play to the narratives of what we think might happen, but rather to react responsibly. A very heavy week in the markets this Monday afternoon. Had the great pleasure of being on the floor of the stock exchange, a very red day. But of course, not really giving the characteristics of full capitulation. We're not seeing the market wash out in the way that we're seeing it grind lower over time. And so, Alex, if we want to take a look just at the equities from a sector relative strength basis, let's take a look at what's been leading and lagging. Now, obviously, for every investor, we want to participate in the absolute trends, but we can also use these GoNoGo methodologies on the ratio charts. So think about each sector of the S&P 500 compared to the index itself. When we see relative strength, we're going to see those that are in the green and blue colors, showing us that they are outperforming the downward trending S&P 500, the index itself. And so from a relative strength perspective, we want to own those sectors that are losing money more slowly than others. What's jumping out to you, Alex? It really looks like the situation remains unchanged.
Not a lot of change. Like you said, lose more slowly and hopefully lose less. It's about generating that alpha. And a lot of people forget that the alpha could be less negative. Being less negative than the benchmark is a good thing. So you can see here that we are in the same sort of spot that we've been in, where you've got the growth sectors dragging the market lower. You've got technology, discretionary, and communications, these three top panels that have been in no-go trends now for a few weeks, or for longer than that, for a couple of them. Interestingly, we see financials now actually starting to turn, and we've seen it in a no-go trend, and now we see some amber go fish bars this week in the financial sectors. And of course, the outperformers are still the same. Energy, the cyclical value sectors, energy, staples, materials, utilities. So not much has changed on a sector relative map basis.
Excellent. So when we're thinking about the index overall, let's take a look at the price action of the S&P 500, just to take a look at what's been transpiring this week in terms of those very heavy down days. And in particular, one of the pieces that went out to our subscribers earlier this week was just where we're looking for key areas of support, right? When we're in this market free fall and continuing to grind lower, where would we look for those opportunities to potentially look for a reversal in trend? And I know there are a lot of analysts kind of stretching and reaching for what could be signs of a bottom, looking for that counter trend rally. It's just not showing up.
Yeah, we were here, if you can see the crosshairs on the chart, on Friday, right? Looking at this prior levels of support during the no-go correction that started at the beginning of the year. Monday, we fell right through that level and we moved lower, obviously, every day since. Today, we've been up and down. We started low, we moved up, we've come back down again. So very strong no-go bars and moving through one of the more recent areas of support as the oscillator gets turned away from the zero line on heavy volume and moves back lower into negative territory.
Yeah, so quick little bit of housekeeping. That top panel is your trend conditions. That's the composite blend of all of the most tried and true technical indicators. And then in the bottom panel, we're trying to get a sense of momentum. So again, combining the benefits of many different oscillators without clouding the chart. and adding to your analysis paralysis. So when that moves from a green to a dark blue line, that's also telling us we've got high relative volume. When it's below the zero line, that means we have oversold conditions. The composite inputs of the oscillator are all in their negative areas. And so we're seeing excessive selling, not yet to an extreme oversold, but certainly more destruction ahead for the S&P.
Yeah.
Alex, if we zoom this out to a weekly chart, now we've been looking at this on the daily basis, but if we're looking for the next area of support, we got to look back through history and see where there is coalesced buyers around a specific price level.
Yeah, this is what we were looking at on the daily chart. These levels in here that stretch back to this pullback on a weekly chart in October of last year.
Mm-hmm.
Now, we, with this week's bar as it stands, have gone right through that.
Yep.
So we'd have to look back further across the chart. If you can see where my crosshairs is here, we can see that there's a clustering of buying back around here, which was last March. So potentially there's support here, but as you can see, there's a lot of black space on this chart underneath the price bars.
Absolutely. So thank you for taking a look at that on multiple time frames. You mentioned earlier that bond prices, so the selling of US Treasury bonds, let's pull up the ticker TLT. Now, what's been happening is a lot of speculation around the Federal Open Markets Committee and whether or not there was going to be a 75 basis point hike last week. Turned out not to be the case, but that's like the fire department telling you, yeah, the house is on fire, but don't worry, we're getting the fire under control. Fact is, the home's still burning. Rates are going up, and the Fed has a mandate to stem the tide of inflation. They're going to continue with these rate hikes, perhaps maybe not as aggressive as what people were expecting. But the sell-off in these treasuries, Alex, what are you seeing from a no-go trend perspective, and even those trend continuation icons? Let's talk a little bit about where we see further evidence to the downside.
Yeah, the trend has been down in treasury bond prices. Remember, that's the inverse of yields, right? So yields have been rising. We've been in a rising rate environment. Treasury bond prices have been moving down in a strong no-go trend since the beginning of the year. Those trend continuation icons that you're talking about happen every time the oscillator finds resistance in a no-go at the zero line, right? So we know that when a no-go or bearish conditions are in place, the trend is down, momentum should be bearish. There should be a lot of selling. So every time that momentum cools, the oscillator rises to the zero line and in a strong no-go trend gets rejected by that zero line. When that happens, we see these no-go trend continuation red circles telling us that the trend is likely to continue in the direction that it's going. We see this throughout this move lower. We see them every time the trend consolidates or corrects against the trend. We see rejection again at the zero line. Right now, we've seen a rally this week in bond prices, which has pushed the oscillator to the zero line. So that's another one of these moments where it's going to be very interesting to see if this trend continues. If it is healthy, we would expect resistance at the zero line on the oscillator, and therefore perhaps a new lower high leading to a leg down in prices. Now, if the oscillator blows through the zero line, of course, that's a concern for the no-go trend, but right now it's acting as it should.
Absolutely. We're seeing rates right around 3%, and from a really long-term, quarterly chart of rates, we've seen they've been coming down steadily since the early 1980s, and that's a very powerful 40-year trend. Could we be looking at a complete reversal, or could all of this rising rate activity simply brought us back to the mean? We could be reverting again. So we want to keep our minds open to both possibilities. Potentially a rally here in bonds. We'll be watching very closely at that zero line. Alex, speaking of things with the flight path of a brick, as Ralph McIntyre used to say, let's check in on Bitcoin. And right at the start of this year, I think it was actually a end of 2021 special on StockCharts TV, you and I were talking about the digital asset space, how disruptive the decentralized finance technology was, not just to the financial services industries, but to many other areas of the marketplace. And potentially, a $3 trillion market cap suggests that this is not going away. This week has been a great reminder of the correlation between these altcoins, Bitcoin in particular, and some of the tech stocks or growth equities seem to be highly correlated. And it's a good reminder that we are involved in a very volatile risk asset. So from a trend perspective, and I know a lot of people lost their shirts this week on their Coinbase holdings, what are you seeing in the Bitcoin chart in front of us?
We've had a couple of key levels that we've been talking about for some time with Bitcoin. And one of them was sort of right around that sort of 34, 35, 36,000 area of congestion or support. And that's where we were talking about, would we be able to find support as we came down to those levels? And we really haven't. It just has blown right through it. You can see strong, consistent purple NoGo bars, oscillator getting rejected by the zero line, rolling over on heavy volume. And now we're right around 29,000, which if we were to zoom out on this chart, I'm sure that the 29,000 level would be really significant.
Let's switch that over to a weekly basis. And of course, for subscribers to GoNoGo Research on Monday morning, what went out was looking at that 33,000 level. If that was going to provide support, and if not, our next price target was 29. And so, Alex, what are you seeing in terms of a confluence of buyers or sellers at this level right here?
Yeah, so this is that area of congestion that we saw on the daily chart, and we were talking about, well, if we weren't able to find support there, where would we go to next? And you can see this level of around 29,000 that's been significant support in the past. There was congestion around that level way back here, and then as that Go trend corrected, that level provided support. Now, the current bar, the weekly bar at close, if we end here tomorrow, will be right at that level. And it's very interesting because the oscillator is below zero. We broke out of a squeeze to the downside, and we're on heavy volume moving into negative territory. So right now, the picture is very, very bearish, and we're in a no-go trend. We've seen trend continuation to the downside, but we should find support. Given that there are buyers at this level, or there have been in the past, people may be thinking, okay, this is a good time to get back into Bitcoin, or to load up on the Bitcoin, given that it's been support before. So this will be very, very interesting to see if it holds now at this level.
So Alex and I are not believers in bottom fishing or catching falling knives, and many of you have lots of good jokes around that. And as fundamental investors or value investors, that's really the discipline. It's finding something that's been, the back of sentiment has been broken. There's, no support, but to see something that is perhaps undervalued, that you buy it with the expectation of it returning to a long-term mean. What we're trying to understand as trend-following investors is what the marketplace is telling us, and we want to react responsibly. So right now, all the evidence on this chart is showing us a no-go trend.
And certainly, if that was your thesis, if you are looking for an opportunity to buy Bitcoin, you could go to the daily to at least wait for something in the sort of a go, or some indication that momentum was positive, that the go trend was back on the daily. You certainly at the moment are seeing no-goes on multiple time frames.
Very good point. Very good point. Enough about what is in the downward no-go trend. We've seen a lot of pink and purple so far in today's episode. Let's talk about what has been working throughout this year and well back through 2021. We've talked about the commodities trade, obviously inflation driving a lot of these price gains. But if we look at the USCI, the commodities index, just from a high-level perspective, what are you seeing on that trend, Alex, for commodities more generally speaking?
This is the weekly chart. We'll dive into the daily in a second, but the weekly chart just shows you what a strong trend this has been. Really uninterrupted go colors, aqua and strong blue, oscillator finding support over and over again at the zero line. Now, we have corrected sideways. We've consolidated sideways over the past few months, and the oscillator is at zero. So on the weekly, is this a pullback moment? If the oscillator can find support at the zero line, it would suggest that the momentum is still in the favor of the go trend. If we go down to the daily, we can see a little bit more details about that. And we can see that this is that sideways consolidation that we saw at the end of the weekly chart. And it, in fact, gave an amber go fish bar a couple of days ago. And the oscillator is struggling a little bit as it dips into negative territory. So we would want to see the oscillator back above zero, go trend persist. They are back in go colors if we are to look for a continuation of the trend that really has been driving the markets. That's the commodity trade. And given that there's a lot of discussion around the analysis of a super cycle in commodities and the long-term view, if you're looking for a reason to participate, you would want to see this oscillator back above zero to tell us that the direction of the momentum is in the favor of the Go trend.
Absolutely. And just as an exercise in investor behavior, we saw that go parabolic back in March, and we're struggling to sort of digest those gains. But when we look at a very long-term chart, again, this is a commodities index. So we're looking at minerals, we're looking at the energy space, we're looking at agricultural products and other materials. And so, Alex, let's dive into a single security just representing the energy space and oil in particular. Well, Chevron, CBX. And if we're looking at that from a trend perspective, we've got really strong go bars through 2022 so far, and now we've run into this a little bit of resistance as those price gains are being digested.
This is the beauty of, I think, looking at technical analysis in general. It's about when maybe it makes sense to participate in a trade that you might have a feeling is a good idea, right? Yeah. We don't want to trade what we feel or what we think. We want to trade something that makes sense. And technical analysis as a whole gives you an intelligent framework within which to invest. So that being said, looking at Chevron, expecting the energy trade to continue perhaps long term, we would be waiting for certain things to develop here on the daily chart to get us really happy with the state of this security. Namely, we would want to see the oscillator, which is building a max squeeze. You see the grid of the squeeze building to a max. That's because the oscillator is riding the zero line, meaning that there's very little directional momentum at the moment. We would like to see that break out of the squeeze into positive territory, which would likely lead us back to go bars. And then we could say we will look for an attack on these prior highs because momentum is back in the direction of the trend. If we don't see that, then we won't see this as an opportune time to enter the energy trade. If, for example, the oscillator breaks back below zero, that would tell us, hey, the momentum is not on the side of a possible go trend.
Absolutely. This is the question on every investor's mind, whether this is a buyable dip or the beginning of something bigger. So GoNoGo charts are going to help us eliminate the analysis paralysis of having too many lines on our charts. We'll be able to follow these rules very quickly, limit our losses to the downside if indeed it breaks to the downside on that max squeeze. We may see prices trending lower. It's not just about the fossil fuels. Of course, biofuels and agricultural products are a big part of the commodities index and a big part of this sort of inflation trade that we're seeing, this longer-term cycle. So you pulled up the chart of corn. Talk to us a little bit, Alex, about what you're seeing here on this daily chart.
Well, it's beautiful, right? Look at it. It's just blues and aquas, and every time that the price consolidates or cools off and corrects, we see support at the oscillator at the zero line over and over and over again. Look at all of these go trend continuation icons that we got throughout this move. What a strong trend it has been. Now, not like what we saw on Chevron, we're still in a go trend, right? We're seeing these go bars persist. We saw weaker aqua bars as price corrected from the highs, but we've now, the last couple of days, seen the strength of the go trend return with strong blue bars. The oscillator did dip into negative territory briefly, but has rallied right back to the zero line. So again, if we get the oscillator back into positive territory, what will we see? We'll see another one of those green go trend continuation icons, which would suggest that we're going to make an attack on the prior high here.
Absolutely fantastic. For all of you who are watching this on YouTube, thank you so much for being with us this week and every Thursday at 3:30 p.m. Eastern here for the GoNoGo Charts show. We're going to take a look at the top-down perspective across the asset classes, sectors on a relative basis, and then some individual names, some trends and some conditions that we all want to be aware of. For those of you who are interested in GoNoGo Charts, I want to invite you as well to join Alex and I on June 15th this year for a much longer deep dive into the educational aspects that we cover every week in this show. We're going to go through a lot of longer-term examples as we conclude the first half of 2022. We're going to talk to you about some of the methodology behind the GoNoGo charts and trend following investing as a strategy. So that's June 15th right here on StockCharts TV. If you're watching this on YouTube, make sure to also check out StockChartsTV.com download that app so you can watch these shows on demand wherever you take your mobile device with you. From all of us here in Midtown Manhattan, thanks so much for joining us this week. Alex, it's always a pleasure to see you in person. And
twice in a couple of weeks.
Twice in a couple of weeks.
Yeah.
Seems like a new trend.
Yeah.
At the beginning. Thanks, everybody. Be well, stay safe, and we'll be back with you again next week.
Take care.
Cheers.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.